Hey, it's Anthony Meisner with Land Title. Just came to bring you your market update. And so this kind of wraps up the year as we kind of get into this. So just wanted to kind of give you where did we land? Where are we headed? Everybody's been asking a lot about this. If you didn't get a chance, check out the other video I do. I'll give you a full year wrap up. We'll shoot that here in the next couple of weeks as well. So keep an eye out for that one. Basically, here we are, total market for Boulder County, 14% increase in active units from this time last year. But as you can see, that gap has changed dramatically over the last couple of months. So expect another year of increasing inventory as long as our under contract numbers have kind of stayed lower, right? So if you look at this as a whole for the year to date, 30% increase more inventory, only about 5% increase in under contracts, although more of them were obviously closing. So that's a good sign that more came to the closing table. Now, if we look at it by where's that inventory taking place, you can see Boulder City over the last 12 months has had more inventory than most places dramatically. Now, Louisville, huge increase in active units. We have 100% more inventory than this time last year. Erie, 50% more inventory than this time last year. Somewhere like Superior is up only about 10%, Longmont up 15%, Boulder up 11%. So big void depending on where you're at. And the only one actually has less inventory than it did a year ago is Lafayette. So it really matters location, 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 right? So watch this stuff as you're taking listings or you're working with buyers. Certain markets are going to feel way tighter than others, but as a whole, we do have more inventory, especially in places like Erie that have a lot going on. Now, month supply of inventory, this one obviously is a big deal when you're listing a house, right? How much competition do you have out there in the marketplace? 2.3 months of inventory in December, when December, January are usually some of the lowest. So we could definitely be on the rise into next year, a lot like last year. But the big thing is if you're taking listings, this could really help you get them on earlier. And it really matters whether you're in Superior or Lafayette, because those are both ends of the spectrum, one being at 3 months, one being at 1.8 months. You're going to see this transition take place again, where certain markets are going to be moving a little faster than others. So keep your eye on this one. Days in MLS, we're right at 63. The national average was 71, so we're still a little faster than that. But it is a pretty slow market in some ways. Now, a lot of it is smoothed out. Even though we have a lot of inventory in Louisville, Louisville still leads this at 38 days. Quick-paced market. Everywhere else, probably pretty similar, right? It's going to feel like it's about 2 months. Now, if you look at it by price range, sales by price range have dramatically changed in the last year. Now, our total sales volume in the luxury market is down. A lot of that due to the 2.5 to 3 million market, but a huge increase finally from 800 to 2 million. So 800,000 to 2 million looks a lot better than it has in years past, or I should say years past, but at least over 2023. That's a good sign because that means that things are loosening up a little bit. People are definitely motivated to get out and shop. This is for detached. So let's check out attached. Attached is having a much harder time. Most of the market is in detached right now. Things are shifting that way because of all the challenges in the attached market. You can see that almost all of our price ranges are having a decrease in sales. And so this is a really tough one, but just understand that it's just going to be harder to sell attached product in the coming year. Now, if we look at the speed of market, detached, your luxury product, 7 months of inventory, 8 months of inventory, that's pretty good right now. I mean, we were at 18 months at 3+ million at one point last year. So that's looking fairly good, but it means you might need to get listings on early while they have less competition. And if you are looking at, 2 million and under, really, really tight. So great time to get listings on the market. It might be taking a little longer to sell, but buyers are out there and there's not a lot of competition yet. Expect that to change, and this will rise over the course of the year. Now, in the attached market, a very different situation. Inventory situations, even the tightest markets are in the 2-month inventory range, but luxury stuff in the city of Boulder seems to really be doing pretty well. It's moving pretty quick if it's buttoned up. You might only have 2 or 3 months of inventory in some of those ranges, but that $1 to $2 million mark, that's a really tough mark. Obviously, the really high-end stuff is a lot of inventory as well and not a ton of sales. So just kind of keep your eye on the attached market. It's all going to change. Plus, it's taking a lot longer to sell. So watch that as well. Average sales price. Everybody's always asking me about this one. Over the course of the year, what happened? Well, the detached single-family homes in Boulder County, year over year, are up 5%. But if you look at all 12 months combined, we've seen a little bit of a depressed market. We've seen 3.3% drop in average sales price across Boulder County if you kind of look at the combined 12 months. But really depends on where you're at. If you look at the city of Boulder, that is only down 3%. If you look at Louisville's up 12.5%. Could be largely due to what happened with those burn lots from the fires. Lafayette's still up 4.5%, Superior up 7%. So there's a big difference market to market. Now, everything's pretty much stayed stable out in the county. You got Longmont, Erie, Niwot, they're all pretty flat. Just like the city of Boulder, it looks pretty flat. Now, attached, this is the tough one to swallow, right? Year over year, we're up 4%, but trailing 12-month wise, we're still down 3%, largely due to places like Boulder or Louisville or Superior. Superior's attached market is having a real tough go at it, minus 6% right now. And it could largely be due to new builds competing with resale and stuff. And there's just a lot going on there. So lots to unpack. If you look at other places, Lafayette's done pretty well. It's pretty flat. Longmont's done pretty well, very flat. Erie suffered just a little bit as well. Just insurance issues and everything else have really played a big factor into this. And I think that's a couple of years coming still. So that's a tough market. The detached market is going to be our gold standard, just like it always is. If you look at sales, look at total sales volume. This is a great sign to show. Fourth quarter came up a lot. We really saw more buyer behavior out there. If you need a way to motivate buyers to get into the market early, you can show this. You can really see, look at how much more activity took place in the fourth quarter. We really got to get out there, right? So I think this one can help you out. You can really see optimistically we should have a better start to the year than we did before because we've been up, basically 25% year over year in our total sold units. So January, February, March also should kind of take off a little bit faster than usual, which is a good sign. We should have some more sales take place this year. In the attached market, it just wasn't like that, right? We had a slower start to the year, which we had a great start to detached. And then we just had a rocky year, right? And you can see the seasonality in the attached market is very different than the detached market. So it really doesn't matter as much when you list homes, but you can really see that, we've slowed down a little bit in our total sold units by almost 5%. Okay, last slide for you, the percentage sold price to list price. You can see that we've been running right around 98%. It depends on price range where you're at, but it's been very flattened out and it hasn't changed a ton. The one thing that isn't accounted for in here is our concessions numbers or our if you drop their list price. So this is actually price at the time when it goes under contract to the time it's sold. But you can see that they've come down a little bit, about 0.5% to 1%, depending on the price range over the last year. Maybe that'll change a little bit, but expect more inventory because you have more sellers coming in the market, even with more buyers. And if they rise at the same pace, this should all be very similar to last year. So, going into 2025, expect that the market feels a lot like it has over the last few months. It's going to continue to feel like this. It's a little bit harder, but a little bit more volume. And I think those are some of our biggest takeaways. So if you have any other questions, feel free to reach out to me. Definitely have other data for you if you need it. If you're working on listings or buyers, please reach out to me. I'm always happy to help. This is Anthony at Land Title. See you next time.